Hi, this is Simon with Trade and Perform Coaching, doing the trade review for Friday. Friday was the 21st of March. It's currently Sunday evening, and I have spent a fantastic weekend away from email and charts for the most part, and off my computer and off doing things with my family, and basically just enjoying some time away from the market, which I think is very important to reset your mind every once in a while. So that's exactly what I did. So let's kind of jump into the day. I want to show you my the most basic chart that I had, and this is what I published at the end of the day, business-wise. And so a couple of things. On Friday morning, coming in, I was very hesitant to short out of the gate, and I have my Friday morning's market preview recorded and posted right underneath this trade review. So the important issue, or the thing that I was concerned about the most, was that the prior day we were having consistent drives up, right, with very little rotation down and continuation up. And what I said specifically in that preview was that I would need to see evidence to the contrary, meaning that we weren't continuing to drive higher before I started working the short side of the trade. And then the other thing that I noted was that we had a lack of rotation. I wanted to see rotation begin before I stepped in on being too aggressive, either to the short side or, for that matter, to the long side. This market has been, I guess, the hallmark of this market has been directional, meaning straight up or straight down. And it's made my type of trading a bit challenging. It means that we've needed really good stretches to make trades work, and that in many cases it's caused me to actually struggle a bit. As a matter of fact, on Thursday was the first time in a very long time that I got stopped out on 2 trades back to back. And actually, the challenge of that has actually made me quite tired by the time I got to Friday, and I put that all into account in one day. But as I was going through that preview, I said I needed to see evidence to the contrary, and we got that evidence almost out of the gate. Now, this is why often I'll watch both ES and NQ. NQ is the futures for the NASDAQ 100. Okay, so ES opened up and looked pretty darn close to an open drive higher. I promise you, this sucked a ton of people in to the short side. To the long side. I apologize. But if you looked, and I called out almost immediately, as a matter of fact, I went back and looked at the sequence, and already at 8:33, I reported ES is leading, not NQ. And so, as I stress every single morning, what's important is that NQ throughout this rally has been the leader. Okay. The next thing that came up was that NQ was coming in to, the next thing I pointed out just a couple minutes later, NQ needs to get above 37.10 for the upside to continue. NQ usually leads us higher. This is not hitting new highs is a concern. Okay, and then finally, by the time we got in almost 30 minutes into the day, I said this is gap fill for NQ. It needs to hold. Also, negative on the day and near Globex lows. Not the scenario many were looking for, meaning not the upside scenario most people were looking for. And I said NQ was trying to set a trap here at Globex lows. That was 8:55. And then by 9:09, I was writing that options expiration is always a wild card to me. Oh, someone had responded. Excuse me. Let's skip that and go. In this AM's market preview, I covered the one-directional mentality of the market, and it's been hurting far more day traders than it's helped. And then I said the price action NQ is a prime example. So let's jump over there really quick and look at what NQ looked like on the open, okay, which is why I keep an eye on it. This is the NQ trade right here, okay. On a 15-minute chart, we can change this quite easily. It might make it easier to see it on a 5-minute chart, so we'll do that really fast. Okay, so on a 5-minute chart, this is ES, okay, and this is NQ. You'll notice they both try to start off to the upside, but almost immediately, pre-market, we were trading above. We were trying to reach that 37.10. It was critical that we got above it. we were unable to do so. We rejected out. But you'll notice the drive in ES was actually quite strong right out of the gate. Okay. In the meantime, look how little ES is giving back. In other words, we're still above the opening high a good 5, 10, 15, 20, 25, 30 minutes in, we're still above Globex high. Immediately, in the case of, and we're above prior day's high as well. Within the first 15 minutes, we're already trading below Globex high and below prior day's high in NQ. Excuse me, in NQ. That is correct. These charts are a nightmare for me when you're dyslexic. I keep flipping them back and forth. Also, pretty much outside of the head fake out of the first 5 minutes, open drive lower, right? Also, no counter rotations on NQ, pretty much straight down. And then the real tell was this here. Okay, so again, it's important that NQ was leading. This is an hour into the market, right? And this is ES coming back over and trying to trap these traders here above Globex highs, right in here. Look at NQ. NQ doesn't get anywhere close to, it's below Globex highs, prior day's high, Globex low, okay? And ES, it's a tale of two different, it's a completely different story. It's actually a pretty confusing story. In ES's case, we're below Globex high, but we're above prior day's high and we're above Globex low. Okay, so that's actually pretty confusing from a trading standpoint. The key here that you had to remember was that NQ's been leading us this entire time, and then the giveaway here was that look on the snap back up, we trapped. This is a trap right here, right? We try to trap and go to the other end of the range, which would have been in this case the first hour high, and failed to the downside. But look at NQ. NQ never got back above Globex low or prior day's high. Okay, so this was just a huge giveaway. And normally I try to comment on this, but two things is going on. First of all, I was trading myself, and I'm a trading coach. The idea of the service or what I'm doing is not to call trades out necessarily. When I have time, I do so. But my main priority is coaching people and getting them to successfully recognize these setups on their own and trade for themselves. Secondly, I said that I would not be looking to the short side. I would not be looking to the short side till I have clear evidence that we were trading to the short side. So this was the clear evidence right here that something had changed. And I encourage people every day to trace the size of the rotations. Meaning, if we look at prior day, right? Here, let's clear this out. If we look at prior day on NQ, okay. If we look at the prior day, this is all overnight here. If we look at prior day on NQ, right? Look at the difference in the rotations. This is the open right here, right? We gapped up. We did a little bit of retrace. That was the day's low. And then look, by 9 a.m., top of the hour, right? Just after 9 a.m., we're hitting new highs on the day. The rotations down are minimal in NQ, right? And we're closing up near the highs of the day. There's no downside rotation through all of this. ES, same situation. We opened up and drove up immediately. We came back in for a gap fill. There was data at 9 a.m., which I had said could essentially be the open of the market. We essentially ended up with an open drive higher. And then look at the size of the rotation downs are minimal. Okay? At this point, when I'm coming back and looking over here at the other side, at the other day, this is a distinctly and vastly different picture than the prior day. And again, it's been a hallmark of the market's driving and having no upside rotation. However, and there were other signs, but I want to show you this before I go in here real quick. Okay, so the first thing that I noticed that was actually working quite smartly was the first test of the zones were immediately giving rotations up. Okay, and I had noted, okay, on this zone, there's a couple of important things. At 9:30, we had tested the, we came within one tick of this zone, of this, 1868 was the low right here. The zone was 1867 3/4. No big deal. When it comes within a tick, I consider a zone tested. Okay, so next, when you rotate up, we had a decent rotation up, but it was smaller than the rotation down to begin with in ES, right? So that's the first sign that there's a problem to begin with. Okay, that's a very different change. Also, this is the first rotation. This zone right here got tested here on the open. We had a quick little dip and then pushed up from there. If you look at the second touch here, when we came back through, so this zone got traded through, we came back up. You'll notice this is the first touch, either this touch or this touch, depending on what your math is, right? This is the first touch from the underside, and it pushed back down the first time in, okay? So we broke the zone, we came back up, and we pushed back down. It's the first sign of weakness. And we're now below Globex high. So this is an attempted trap, right? I'm not going to go over the parameters for the trap trade that I have. I'll work on that with my coaching clients, but this is an attempted trap trade. This is an attempt to bust that trap trade right here. But importantly, in this zone right here, I called out that I said I considered this zone well tested at this point, 1867 3/4. And if you look, this is the second time into the zone, and the zone breaks. That's why it's important in my trading methodology, okay? And this is just this is my most basic approach, right? First time into the zone creates the best odds, right? So first time into the zone here, right? From above, we got rejection. We didn't have a good rotation necessarily, right? This is a very small move up into the zone, but we got rejection. Again, I was not looking to trade to the short side at this point prior to the open. I did see NQ's weakness. I took NQ to the short side, but I didn't call the trade. However, I was not short ES. I can tell you that right out of the gate. Secondly, if you look first time into the zone, it missed by a tick, right? You have to have the discipline to know that if it comes within a tick and it rotates up 2 points, I consider the zone tested. You have to have the discipline to know this second trade is very aggressive. Okay. Also, if you look at the time of the day, this is right at this point is already 11 a.m. My highest odds trades occur between 8:30 a.m. and 11 a.m. So I made that mistake the day prior, right, of taking a trade after 11 a.m. I don't make the same mistake generally twice. So I did not get smoked in this area. As a matter of fact, I was already gone for lunch by the time this occurred. Also, if you look, this is a move down at 9:30, which is normally our reversal hour or a good point of day to get a reversal. We had a nice rotation here, right? It just didn't hit the front of the zone. You can't get frustrated if the market doesn't participate with your trade plan, right? You just got to stay cool. If you look at this rotation up from 1867 3/4 all the way up to 1875, that's a pretty fat rotation, right? Also, this demonstrates very well why I want big rotations. This was only a 2-point rotation up into this zone, and if you took it with a small rotation, it burnt you to the upside, right? So, yeah, this is the first down day. The setups in the morning weren't that great. I would have loved to have gotten a fill. I was waiting right here to get a trade to the long side. It didn't develop, and it's no big deal. My objective is to take my highest odds trades when they set up to get 1 or 2 trades a day. That's all you need to build a large trading account. 1 or 2 trades a day for 2 points a piece, and you can make an enormous amount of money. Also, trades into the white zone are generally very high odds. However, this trade came in at a time of day where, at least for my beginning traders, right, until they build up a significant cushion, generally speaking, this is the time of day to make the money. My most successful traders are all only trading in this time period. But look at this first move into the zone, right? Even on a down day where we're getting a down move, 2-point rotation higher, right? This paid. And every zone, I believe, and we're going to find out before I make a mistake here and say something that isn't accurate, but I believe every zone, first time into the zone, generated a 2-point rotation, even near the end of the day, where, and this is an area, again, I'm not trading the last hour of the day under any circumstances. Also, at this point, sellers were definitely in control. I would not be overly anxious to trade at this particular juncture. So let's talk about the downside. In my trading methodology, if you're following me, I generally miss the first move to the downside, just like I generally miss the first move to the upside. Why? Because I don't like getting run over, generally speaking, and the easier trades are after the break occurs as opposed to before the break occurs. Also, a lot of times in order to catch these moves, you had to be very strong or very good at identifying that there was a problem here. And really the only trade that set up cleanly to the downside was NQ. If you look at how ES hung up, even if you identified that it was going to have a move to the downside, ES got hung up at here, right? So if you were watching NQ and you were trying to stick this trade, this thing came back more than 3/4 of the way. It was very hard to hold and then capture this downside move, which came and started at New York lunch. Also, I want to point out something about New York lunch. New York lunch is notorious for actually breaking, for being hard to predict, which is why I don't like trading it, right? Some days it just does this in a very tight range, and other days it just simply busts zones to the downside, and it's very hard to predict which one it'll be, and therefore a hard, frustrating period of time to trade. So, and I think Friday was important, so I'm going to go a little bit longer than I normally do on the trade review, but not a lot longer. So we've gone through a couple of things. First of all, NQ led us to the downside. It was a huge heads up. What did this save me from doing? This saved me from overcommitting on the long side and getting frustrated all day long. Or hopefully, if you're a trader that's been trying to capture these open drives, right, and move to the upside, okay, and I know there's plenty of guys out there right now that are doing it because I heard from plenty of them over the past 2 weeks that have been getting smoked on our down days, right? This should have helped you significantly in seeing that NQ move. And the second point was that the trap trade both on NQ and actually in ES worked quite brilliantly to the downside. The third point is that the zones, so far, and I'm just kind of giving a synopsis of what's happened so far, is that the zones at or near the zones, right, actually gave beautiful rotations back to the upside on the first touch, even late into the day, right, where we were having challenges taking the long side. If you place those trades well, right, meaning at key locations, you should be able to have a nice rotation higher. Not each and every time, obviously, and nothing's guaranteed, but good trade location certainly increases the odds. Now, I want to go over another piece that I'd gone over in the morning, just to emphasize. Again, I said there was no downside, or there could be no downside, because I was concerned about the downside in the morning. I just wasn't willing to bet on it in terms of saying we will go to the downside. The first thing I pointed out was on the larger time frame, right? We have this trend line that we were gapping above, and I said the first thing I said was a backside test of this larger channel made sense, and then if we did, I would probably expect responsive buyers to step in there, and we got that. Okay. The next part was I said that it has not been uncommon, and again the video is right below here so you can see it. It's not been uncommon, right, for us to trade outside of a channel, pop back into the channel, and in a very short period of time go to the other side. Well, we didn't even bother hanging out on the upside of the channel very long. We popped outside of the channel, rejected, and moved to the downside. I also pointed out that one of the concerns, which was giving me reason to be very patient in this particular area, was that we had, this was the prior high right there, that we were gapping just below that we were driving just below that really we needed to clear above this to get a move to the upside. Okay, and the second thing that we needed to be accomplished was we needed to hold above here, obviously, to maintain the upside. And then if you looked on the smaller time frame, the moving averages, and I believe I had it on this chart right here, I had pointed out again in the pre-market, right, that these two moving averages, or trend lines, excuse me, right, that these needed to hold. They were key. And if not the first one, certainly the second one. And you can see, right, as we got to these, that there was a pause here, right? That people tried to hold it and get the reversal to work to the upside. Again, here you can see we tried to hold this, and it was right at the white zone, right? They tried to pull off a reversal to the upside and weren't able to do so. And once it broke, they did a retrace back. This is breakdown. This is structure. Breakdown. Retest of bottom of structure. move to the downside. It was pretty much beautiful to the downside. I would still say that this area right here, possibly overnight, this 1868, excuse me, to 1870 level needs to be retested either tomorrow or perhaps overnight. If we don't, it would be a further sign of weakness, right? But at some point, this will get tested. And then, of course, I can tell you it's Sunday evening. We're pretty much trading flat right now as I'm doing this trade review. So there were a bunch of ways that you could look and tell that that the market was weaker than normal. Again, the first clue was the larger rotations down than the rotations up was the first clue of the day. Second clue of the day, we were unable to clear first hour high. That was a warning sign. We broke first hour low. We broke the more aggressive trend line, and then later in the day we broke the less aggressive trend line. Also, we finally broke through below the white zone. Normally I would expect responsive buyers at the white zone to try to push back up. There was lots and lots of clues, and my objective, again, remember with my clients, I have two objectives. First, stop losing money. Number one, protect your capital, most important asset. Secondly, protect your mental and intellectual capital. The traders who lose the most money and have the hardest time trading are the ones who demand a profit every single day when they trade. And that's different than wanting a profit every single day you trade. Every day I come in, I expect and want to make money. I simply don't demand it from the market. When you demand something from the market, you make a shift. You're no longer asking the market what opportunities are you supplying. You're now dictating your terms to the market, and guess what? Market doesn't give a damn about us. That's a problem. It's an inanimate object. It's a mass of people that just don't care about the individual. And so you got to be careful about projecting your own wants and needs onto the market and expecting the market to respond to that. It just leads to frustration, lost money, anger, and all kinds of bad trading habits. Okay, so we covered all of this to the downside. We covered the key points that we were getting weaker. And I got to tell you, by this point right here in the morning, at this point we'd come up right here. No serious damage had occurred on ES. And I think I checked out right about here for lunch. Okay, so the second test, I already pointed out, we already had it tested the first time. You should have stayed, like I said, except for the most aggressive traders, this is a harder trade. Why? It had already been essentially tested right here. Again, first time into the zone, provided a nice rotation up for 2 points. We came close to touching here, but really the zone was right here first touch, and you did get a rotation if it wasn't 2 points. Trading on a down day like that with essentially 18 minutes left to go in the day, man, you're a braver person than I am. That doesn't go down with me. I'm not that kind of trader. I don't like putting myself in desperation situations where I have to guess what the market's going to do, whether it's going to keep driving lower, get a short cover, back up. It's not my cup of tea. It's not a high odds trade. Okay, the best trades here were all trap trades. I had several of my clients capture them. I didn't call it out, but as I said again, if you look through the warnings, right, the price action in NQ, and I want to emphasize this, okay, you should print this off. This is what a classic, slightly modified open drive lower looks like. If you discount the first 5-minute bar, in here, this is open drive lower. This is lack of rotation higher. Moves are lower to the downside than they are to the upside. If you're a trader, this is essential that you're measuring this stuff, or you're asking to lose money. Quite frankly, you've got to capture these changes quickly. And if nothing else, what this told you was caution to the long side. Right? Let the market prove itself. Let it get above the opening 5-minute candle, right, to prove that there's actually some upside. And if you're trading to the downside, right, the reason why I target 2 points is my first scale, and I've actually caught some flack from random people, which is fine. I don't care about that if they want to, because the rotations have been so much higher. But the reason why I focus on 2-point rotations like this here, had we hit the zone, right, this here, and really this here, I guess we could have, if it was stretched a little bit lower, it would have been this here, but they stepped in front of it. The reason why I focus on 2 points is this. Look, rallies fail. Okay, same thing with downside. I know I have a very high odds chance of capturing 2-point moves. It's small, much smaller than the average move, and I'm looking to bank my money as quickly as possible. Why? Because I'm trading in a leveraged way. Even traders that have been struggling, who I coach, right? We've been struggling to make profit, not to avoid losing money, right? Most of them are either just below break even or slightly profitable for the month, and I'm cool with that. And let me tell you why. Because as they grow past their first series of trades, right? A couple of them have caught the trap trade and made good money. None of them are in a hole. And this has been a really hard market. And I promise you, there's a lot of traders who are in the hole, right? And they have their eyes set to the next coming days and weeks. All we have to do is have a solid week this week, and it salvages the month in terms of profit. But no one is walking away from this going, dude, I'm in a serious hole, and there's no way I can recover. And that's the point, is when markets get hard, if you can just simply avoid burying yourself in the hole, right? As soon as the market gets easy, the P&L comes quickly and you get paid. So I'm hoping that we get a two-way market. If the market gives us continues to give us this right here, continues to set up the trap trades as we did essentially here and here, okay? That continues, and we continue to get these rotations at the zones like we did here, here, and here. There'll be plenty of money to be made. I have no issue with it whatsoever. I usually miss the first down day if we're actually going to start a downside move. We'll find out probably tomorrow. And so the pre-market will set that up for us. And I look forward to making a lot of money if that's the case. If we go back to what we've had over the past week, where the market basically goes straight down and straight back up like that, I'm probably going to still struggle a little bit, but my struggles will be in such a fashion that either I'm taking very low risk, right, and not building a mountain to have to get back over when the market gets easy for my style of trading, right, and secondly, I'll be preserving my mental capital, my emotional capital, so that I don't have to recharge on that level either, right, because you can run out of reserves in both of those areas, and it makes it very difficult to trade consistently. So for good traders, it's not always just simply about getting paid. Sometimes it's about protecting your assets, and your two most powerful assets, your capital in your account and your brain. So anyways, guys, I hope this helped. I wanted to go over in some detail of what happened. Clearly, everyone should have this trend line drawn on your charts for tomorrow. I'll show you right now. Depending on where we come in the morning, but I would have here to here is obviously going to be pretty critical, and here to here. Okay, this one in particular right here, to get any kind of upside, right? Just like I said on Friday morning, I'm going to color this red so you can see it easily. Just like I said on Friday morning, it's going to be important to get above this point and hold above this point for upside to occur, even if, excuse me, let me correct that. In order for upside, you could have looked at it either way. In order for upside to occur, we needed to hold above this point, but that there would be no downside unless we got above this point, below this point, and below this point. Well, we accomplished that, okay? Now we're looking for the short setup if it comes in. Our first clue, or first indication will be if we open and are unable to get above this point, this trend line continues. That'll be the first clue. Second area will be a backside test of this area right here. And then, again, this looks like a very highly likely area to get a backside test, right? Even if it's up here possibly. Why? This is the point of breakdown, and that would provide a potential point of retest and would create something like this, right? So keep all of that in mind. I'm going to go work on the charts for tomorrow, and I will post them in the morning. My name is Simon. I'm with Trade and Perform Coaching. I certainly hope that helped. And remember, if you're struggling in the market, slow down. Paper trade if you need to, right? Reduce your trade size until you're making consistent profits day in, day out. Have a written trade plan that covers where you're entering, what your stops are, and what your pre-planned exits are. That reduces stress, reduces anxiety, and reserves mental capital, so you can actually observe what's going on in the market instead of sitting there in angst, waiting for your trade to work out or not work out, and ignoring all the information the market has given you. Have a great night, guys. Talk to y'all later.